Good morning, this is Jack from Chartered Markets, and this is the pre-market webinar for the morning of Friday, the 24th of April. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you take some of what I'm doing and learn from it, transfer trend charts, and I'm not here to issue trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com and is published on YouTube after a delay of 24 hours. All right, great. We are seeing some higher highs here. Now, the question is, how durable are these likely to be, and are we going to go on a bit higher? I would like to see this go a bit higher. I've got a target in the sort of 72.10 to 72.50 area. It's not an awful lot higher, and obviously it's been struggling a bit, but I think what we've been seeing here is a bullish consolidation. But the bullish consolidation can theoretically just end with the retest of the prior high, which we haven't seen on. No, we have seen on SPX actually. I'll come to it on SPX, but I am wondering about it going a bit higher. But we did see enough downside action yesterday that the daily RSI 5 has got down to a more reasonable level to set up some high quality daily sell signals. So we'll come on to that. But in the short term, we're retesting the high. We've got a possible little level top on ES. On NQ, we are still continuing to go higher, which has meant that we haven't had the RSI 5 action I was hoping for on NQ. Looking at RTY, this looks like a bull flag, which is starting to break up. And that's probably because it is. And we're going to go and retest the high too. At this point, I'm kind of hoping and expecting that YM is going to head back up into the retest of the high above, and I'm kind of expecting to see that next week. Now, just have a quick preview on the stats for next week. We've got neutral on Monday and Tuesday. We've got pretty bullish on Wednesday, and that, of course, is the FOMC meeting. On Thursday, we have the last trading day of May, and that is significantly bearish. And then we've got the first trading we've got the last trading day of April on Thursday, and the first trading day in May on Friday, and that is significantly bullish. So we've got neutral, bullish, bearish, bullish as we negotiate through into the start of May. So that's what the stats are for next week. I'm aware. I was talking to Doug about this on the crypto webinar, but there are couple of key things that I'm watching over the next few days. One is FOMC and the start of the month. 1st of May is significant because really that's the 2 months of the Iran war having happened, and at that stage, really. Trump is required to ask Congress if he can continue the war, which he may or may not do. And then he's got, if he doesn't get that approval, he's got 30 days basically to get, to wind down the conflict and get out. So will he ask for that extension? Will he get it if he does ask for it? These are good questions, and we will see how that goes. The other thing I'm going to be looking at is on May the 10th. The consensus forecast seems to be that at the moment, obviously, the amount of oil coming out through the strait, really the amount of oil being supplied daily is down from, let's say, it's down about 10%. Or slightly more. Now this is balanced. The Bab-el-Mandab Strait, Saudi is getting some of its production out of there, and obviously sanctions have been lifted against Russia, so they're getting some more out of there. But there's still a big gap between the amount of oil being consumed daily and the amount that is available daily because of the trade disruption in the Strait of Hormuz. Now, there will come a point, obviously that 10th takes into account that some reserves have been released. It accounts for basically the mopping up of everything that was at sea before this crisis started. And basically, after May the 10th, things start to get real. And we have a point where unless the flow of oil resumes, and even if it does resume, of course, there is a lag in between it starting to resume and it reaching the oil tankers reaching their destinations. For instance, as I mentioned in my post yesterday, the last oil tanker that went through the Strait of Hormuz before the Iran war started at the end of February actually arrived at its destination on April the 20th. There is a lag. It's quite a substantial lag. Now, when we get to the stage where the world is consuming a lot more oil than is being produced, and that is available for sale, and that we have run out of reserves and above ground, above on the sea or etc., reserves from everywhere that can bolster the market. At that point, we then have a supply crunch. And at that point, you have a price discovery going on, where price will rise until enough demand is destroyed that supply and demand match again. That is a very, very painful and economically damaging process, and this is something I've been talking and writing about. So this is going to happen. I think I would have thought at the moment, unless they release more reserves. So this is looking like the second half of May, and it's going to be very interesting to see what happens in the markets then, and there may be some major disruptions. We will have to see how that goes. But the fact is, even if the Strait of Hormuz was opened up today, there would still be a serious disruption because it would take a while to ramp everything up again. As I was saying, this kind of reminds me about the period before COVID. I mean, I was talking to my brother about how COVID was pretty much inevitably going to be a major problem by the end of January. I mean, by middle of February, we were, toilet roll was becoming very hard to obtain in supermarkets because people were pulling it out and hoarding it in anticipation of a major crisis. When did the stock market make a high before COVID? I think it was mid-February. I think it was mid-February, about 22nd, 23rd. And this meant that the market was not anticipating what was likely to happen. It was more or less the last person to realize, apart from possibly Donald Trump. So that was the way it was then. If you're thinking the market will get there first in terms of anticipation, you're wrong. History suggests the opposite. So when stuff gets real in terms of this supply disruption, that's when we're likely to start seeing some real action happening in the supermarket. In the meantime, I am optimistic it will go up. I'm looking for 72.10, 72.50. I've got a trend line in the 72.50 area I would love to see hit. I'm looking for a high retest on Dow, and we shall see how that goes. All right, DAX looks like a bull flag forming. ESTX looks like a bull flag forming. Nikkei, possible double top here, but we could be about to go higher. We do have a lovely double top on the bigger picture here, but I wouldn't be at all surprised to see this go higher. All right, let's have a look at the bigger picture charts. Okay, looking at SPX, SPX has made it down pretty much to the 70 area. This is what I was hoping to see to set up a nice looking divergence. Go back, retest the highs, ideally, really. I mean, you could argue that that is in place already, but it's not really. We would need to see another spike up on the RSI for there to be any significant divergence. So I'm expecting to see at least some more upside, subject to disastrous news coming out, which of course is always a risk in this situation. In terms of the hourly chart, we haven't got any divergence there. We've got a potential little double top. We had a little double top that broke down slightly and has rejected back up into the high yesterday. A practice run, so to speak. In terms of where I'm thinking this may be going, I am wondering about, hang on, this trend line here. This is basically the overall move up from the 2020 low, and this is where I'm thinking it may be heading. We shall see how this goes, but that I've gotten about the 72.50 at the moment. Looking at Qs, we have a possible weak RSI 5 sell signal brewing already. Is it a high quality one? No, it's only a weak one because we didn't get close to the 70 level. We did get a little closer yesterday. Not quite close enough for me to be comfortable, but honestly, I'm a bit surprised it managed that yesterday, just because NQ has been so strong this week. Looking at the Qs hourly chart, we've now got a full RSI 14 sell signal fixed, and the RSI 5 sell signal reached the full target, as did the RSI 14 sell signal. But this is why I was hoping to see some downside on the RSIs yesterday, and we got it. On Dia, we went down slightly below the 70 level, which is perfect. and it looks kind of like we're forming a flag here, and I think that's because we are forming a flag here. I'm looking for a retest of this high here at 503.37, as SPX goes up a bit, and obviously potentially Qs go up as well. We've got the weak RSI 14 sell signal reach target. You can see a pretty obvious potential flag there. I'm thinking that is a flag. All right, looking at the IWM chart, we've gone a little higher. We've already retested the high. We've made it down pretty much to the 70 level here, just like SPX. And this is a good level to be setting up a nice divergence. So I'm looking for some more upside here, and we shall see. Ideally, we'd start seeing topping patterns form, and we would see a better looking pattern here from the low. We will see how that goes. Do we have a sell signal here? I don't think we do. No, I think we do actually. Yeah, so we've got an RSI 14 sell signal fixed here on the alley. Nothing on the 15-minute chart because that RSI 14 sell signal made target. Does this look like a bull flag here? Yes, it does. Now, obviously, there is a risk at any point that we might get some awful news which might knock the market off its perch, but this doesn't look done yet. I was looking for some breaks of the rising support trend lines, which we've got. I mean, obviously, they haven't been big breaks, but it gives me more to work with in terms of trend lines. If we can then see another move up, by the time we get to, by the time we see the next significant reversal, I might actually have some decent patterns going. And in the absence of patterns, I generally tend to assume the move's not finished. It doesn't look finished. All right, DAX. DAX, we have got a bull flag going. We're backtesting the 50 DMA, slightly below the 200 DMA. I'm thinking we could see a retest this high here at 25.5K, but that is looking maybe a little ambitious. In terms of the Nikkei chart, we've already got a fixed RSI 5 daily sell signal. It is the first. We've got a nice looking little double top here, but I'm thinking we may well go higher in sympathy with the others. What I would say is a caveat to that, though. I was talking to a friend who does a lot of business in the Philippines and across the Middle East. What he's saying is that a lot of business plans are being just put back in the Philippines because of a lack of oil. We are seeing the blunt end of the club is hitting the Middle East, and that's because 80% of the oil that comes through the Strait of Hormuz goes to the Far East, and the Far East is where it's hitting first. We will see how that develops, but it may well be that Nikkei is going to start falling just because Japan is considerably more affected by oil shortages than anything we are seeing in the West so far. All right, great. Let's have a look at the DX chart. Now, one thing we've been seeing here, we're still making new highs on equities, but in terms of oil, we're getting back up into crisis highs on Brent. We're not that far away from crisis highs on CL. We're not that far away on HO, and we're actually already at crisis highs on RBOB. In terms of DX, which is tending to be going up, as this crisis has intensified, we've been seeing a pretty solid rally. Everything except equities is signaling distress. ZB, we have been seeing gentle downtrend there. These aren't big, but bonds have been going down with the crisis accelerating, and bonds have been going up with it pausing off. Everything else here, apart from equities, is signaling distress. We'll see how that goes. In terms of NG, this was a flag. We have retested the low. We've got a potential double bottom here, and I am wondering about seeing this break up and possibly give us a test of where the monthly pivot is at the moment, and possibly where it will be by the time it reaches target. Just over 3. We've got a 60-minute buy signal fixed, and it's quite a nice one. GC, possible double top here. Still wondering about some downside. We do have fixed daily RSI 5 sell signals on gold, silver, and platinum. Silver, wondering about a bear flag breaking down. Palladium, don't really have a decent flag here, but I'm wondering about a possible retest for the low coming. Platinum, decent looking flag here, and that's broken down. Now, this is kind of forming a bull flag at the moment, wondering about a retest of the high, but we could then see more downside while this negative divergence works its way out of the system. And of course, this is another thing. Of course, gold and precious metals have been going down while oil has been going up. And while I'm hoping that will change, it may not have changed yet. Overall, I love the bull flag setup on gold and silver. Short term, is there a possibility we'll retest the low? Yes. So we shall see. Looking at HG, we've got a possible little level top here, and I'm wondering if that might deliver a move down, which would take us down to about the 5.75 area. Looking at the other currencies, not really an awful lot to see this morning. Very little, actually. USD CAD might be a flag. Might be a bear flag here, and this may well be overall a bull flag. We've got down close to the 61.8 here on USD CAD, and I'm a little uncomfortable about that. Australian dollar, nice looking level top here, not a lot to see on NZ. KC, this still looks like a bear flag forming overall for the last couple of months. On sugar, we've been seeing a bit of a rally here. Nothing really in terms of reversal patterns that I think is good enough quality to mark up. But we could, as we get closer to this possible IHS neckline in the 14.25 area, set something up which could be a larger IHS to take us up for a decent rally. On the other hand, the 60-minute bicycle has already reached the possible MS target. CC, perfect bear flag channel here. It's nice. Sooner or later, this is likely to resolve down into a retest of this low. On CT, we've been seeing a little bit of a pullback here in what is an uptrend because we've broken up from a large double bottom. Lumber, I'm thinking may fell back into the lows. First sign of a resumption of the downtrend would be a retest of 560. Wheat and corn and soy, I'm thinking we may well be starting to break up on all of them because of the urea disruption through the Strait of Hormuz. Not seeing a lot of sign of that so far, but we are trying to convert them up to pivot support on wheat. On corn, we're still below it, and actually this looks worryingly like a bear flag megaphone. On soy, we are still kicking around here. This could be a double bottom forming, but this could overall be a right shoulder on an IHS here. So I'm thinking all of these may break up fairly hard over the next few months because of urea shortages and price increases. ZL is trying to resume the uptrend here, which would be consistent with what I'm expecting to see on soy. Live cattle, we're seeing a pullback here. I think this is probably just a bull flag here. I'm not seeing any obvious sign of a topping pattern. We've got a weak 60-minute bicycle fix, and on HE, we've got a nice little rally here. Could be bottoming out. If this is a bull flag, then it should be bottoming out because this is the 61.8 right here. We shall see. All right, great. In that case, let's have a quick look at questions. That's questions. No questions. So everyone take care, and everyone have a wonderful weekend. I'll catch you guys again on Monday. All right, cheers.